everyone has different things to add and to share. Um, when we all become whole, then the world becomes whole. And so the more we can help each other and uplift each other, and share what we know, then more benefits in the world. And so this really is a mixture between, it's a lot of business focus, but it's also about consciousness, conscious business, and personal development as well. Because as you change, your business changes. So we throw in a little bit of everything.
Right. And with the philosophy that what's happening inside is what's demonstrated on the outside. So a lot of this is an inner game, even though we may not have been taught that, but so much of our thought and our way that we live in the world comes from how we treat ourselves and the way we think. So the idea of this is to give all of us a way to support each other in this new way of thinking. So just to respect everybody's time, we'll get started. First, we start with a meditation, and then I'm going to turn it over to Trina to do the wonderful presentation for tonight. So if you can put your feet down on the floor, flat on the floor, and if you're sitting, hold your back as straight as possible with your head up. And what I'd like to suggest and ask you to do is to breathe in through the nose. And first we're going to breathe in from the core of the earth, the center of the earth. Breathe in the energy from Mother Gaia in and bring it up to our heads. And then when we breathe out, we're going to breathe out to the stars, to your star probably. Okay, so we're going to do that a little bit, and then I'll start guiding you from there. So first breath, breathe in from the earth. Breathe out from the star, from your head to the stars. Now breathe in from the stars. And bring it back to your head. Now bring from your head, breathe into your head. Bring it down to your feet, to Mother Earth. Feel the energy going both up and down. Now, as you feel this, realize that only 1% of who you are is in the physical. And as a multidimensional conscious being, there are so many other aspects of you. So start feeling the energy in each cell connecting to the multidimensional part of you. Start feeling it as though it actually vibrates, and it actually allows you to feel that you're like a note, a chord, like an instrument. That the combination of all these frequencies is a note. Feel the energy of that and the delightful excitement your cells can sense by reconnecting to the rest of them. Now, when you're ready, and you feel that you can feel your cord, now visualize in your mind that all of us on this call are holding hands, each one of us with our chords, with our note, and listen to the orchestra that we are. Sense the delight that creation has in this. Feel how much bigger you are than you felt 15 minutes ago. Feel the connection with everyone on the call as part of your song. And now what I'd like us to do is breathe this in so we can hold on to this frequency as we do this wonderful class together. So first, if you could breathe in with your nose and out with your mouth, grounding this energy into Mother Earth. In and then connecting to the earth. Let's do that again. Feel yourself embodying these higher frequencies in every cell of your body. One more time. Thank you. Thank you. So
Thank
now,
you.
Trina, if you could help us ground this new information, this new perspective in, that would be fantastic.
I would love to. I'm sitting here hearing the rumble of thunder in the background. And if all of you are from Colorado, if you're not, we're having a bunch of thunderstorms along the Front Range and knocked out my internet just a little bit ago, just as I was getting on. So yeah, the energy is definitely in the air. So that's pretty cool. Anyway, Kathy, do you want to put the presentation up?
There we go. Is that big enough?
I'm not seeing it yet. It still says you started screen sharing, but it didn't come up here yet. I'm not sure if everyone else has it or not.
It's here. Does anyone there? Can you let us know?
No, we aren't seeing it yet.
You are?
No, we are not.
You are not. Okay. It's definitely.
There it is.
Huh.
It's on.
Yeah, I'm not getting any notification that my internet is slow, but it could be.
On mine.
It just popped up here too, so that's awesome.
Oh, good. Thank you.
Yay.
Is that size okay? Size okay?
Yeah.
Okay.
I think so.
Okay.
If everybody's watching on a computer screen, they should be able to see. So just to give you a little bit of background, I stumbled in, and I'm going to say that really, into working with numbers, working with financials and bookkeeping and things like that. A long time ago when I was 18 years old, my mother-in-law actually taught me how to do books. And I've been doing them ever since. I've been working with financials for a very long time, 40 years, over 40 years. And the one thing, I've also been an entrepreneur since I was 18 years old. So never really held a job unless I chose to. And a lot of times if I did choose to work in a regular job, it was to learn something, not necessarily that I wanted to go to work for one. So understanding how the numbers worked and how to build power in your life and in your business based on the financials, based on knowing where you're at, is something that is incredibly important. And I wanted to bring this forward. I used to joke that I've got my Clark Kent life, which was my business life. And then I had my Superman life, which was more of the spiritual, metaphysical life, because I worked in a metaphysical bookstore for 10 years. I've been studying that end of things for well over 20, and do a lot of work along those lines as well. And over the last year, I realized I need to begin to combine them. They're not separate anymore. They aren't in me. They aren't in anyone else. And we need to start combining the ideas and concepts that we find in the new thought and new technologies, and what we're finding, especially in brain studies and in how powerful the mind is, how it impacts the body, how emotions drive what we're doing, and that everything is energy. So, Kathy, go ahead and switch the slide. I wonder if it's going really slow because it did not change.
Oh, I did change it.
There we go. Okay, so that's where I'm starting with this. When we work with numbers and money and our financials, we're actually working with energy. Everything has a frequency to it, and everything is energy. So there's a little quote there by Einstein, because he was one of the people who realized that and really brought it forward for us, that everything is energy, and that's all there is to it. Match the frequency of the reality you want, and you cannot help but get that particular reality. It can be no other way. This is not a philosophy, this is physics. And that is Albert Einstein. And when you think about relationship, when we're working with people, whether it's in our personal lives, whether it's in our businesses, we have a relationship. It's basically energy and frequency and communicating back and forth with each other. And so one of the passions really that I have right now is learning much about how the brain works and how it impacts what we do. And what they're finding also with heart and HeartMath is that when we drop into our hearts and we focus in on the heart, we expand, like imagine expanding the heart, and then we raise our vibration and our frequency, thinking of love, thinking of compassion, of appreciation, of gratitude. What ends up happening is we create a heart coherence. The wavelengths in our heart begin to move at a very steady rhythm. And when that happens, it radiates out into our field, our electromagnetic field, and it also changes the frequency of our brain. And it brings us into a brain coherence as well. So everything begins to move and work a lot smoother. The reason I'm bringing this forward is a lot of people get very stressed over their financials. They get really stressed about working with numbers or keeping track of receipts or doing their tax returns at the end of the year. And so if you start the process by dropping into your heart, finding a very loving and energetic space and raise your frequency, it's not going to be quite as heavy as what we make it to be with our mind and our thoughts. So it's always a good thing to drop into the heart. Go ahead and change the slide, Kathy. There we go. So the other thing we need to learn, that money really is the general energy of exchange that we have for our goods and services, or that we actually provide, or for the things that we want. And I know in this day and age, there's a lot of things about Bitcoin and a lot of other currencies. There's the idea of maybe we should barter and trade and start our own. But you know, what's really amazing is that no matter how we do it, we need to find some kind of medium, because we can't buy a plane ticket with a blanket, and we can't buy groceries with maybe the oils that we make or the services, the other services we provide. So we need to have this exchange medium. And so the friendlier we get with this whole concept of money, the more excited we get about it, and the fact that we recognize it as a way of exchanging for the things that we provide and the things that we want. There's also a lot of really amazing symbols on the US currency too. There's a lot of power in some of those symbols. And so when we exchange those, even though we hear a lot of people saying, oh, the dollar's not worth anything, there's actually a lot of powerful symbolism. And if you're into any of the energies of symbols, and you start investigating the symbols that are actually on our money, it's really quite interesting, the power that our bills actually hold. So that's a place we want to tap into. Go ahead to the next one. There we go. So money and finances are actually somewhat of a necessity in our 3D physical world of existence. So the point I'm trying to make is, and you can see here's a little garden growing some money. Maybe one of these days we'll be able to do that. Right now it's probably against the law to create our own, but I thought growing it would be great. And the idea is like, you make friends with it, you get to know it, you play with it, you appreciate it. And that word appreciate isn't just like gratitude and being thankful. Appreciate in this sense also means making it grow, get bigger, like we do when we invest in something and we get a return for it. We appreciate it and we grow it. So those are all things that I really want you to set in your head and set in your hearts, and really feel or imagine or envision maybe yourself sitting in a pile of money and playing with it. And it doesn't have to be $1 bills, and it doesn't have to be coins. It could be $100 bills or $1,000 bills that you're just tossing up in the air and you're playing with it. And an elder of mine says, there's enough energy or enough money on the planet right now for you to have, every person to have like $57 million. And the question is, where's yours? So if you begin to think about all of this finance, wealth, what you would do with it, how you would serve people, how you would love people, and the fact that there's $57 million out there with your name on it, you just need to claim it. It makes this a little bit more fun. So that's the mindset that I want you to enter into. Every time you think about reconciling your checkbook, looking at your bank statements, doing your tax returns, doing your books, that this is all just tools that we use to see how we're getting our $57 million. Go ahead and switch. It's funny, it really is pretty slow.
I'm sorry,
I know, it's not, it's just like, wow, this is really interesting.
I don't think
everything's like going really quick.
Hmm.
It's okay. The other concept I want you to think about is that this comparison between a person and a business. So as a human being, we actually have like 4 components. I'm going to just keep to the 4. So we have a physical component, an emotional component, a mental component, and a spiritual component. Well, businesses have exactly the same thing. So do communities. So do countries. There's these components in it. So when you want to think about the physical of a person, you think of a body. When you want to think of the physicalness of a business, you think about the operations, the tangible assets that they have. So the assets would be things like if you had a building, or if you had computers, or if you had vehicles, or things like that that you might use to run your business. And you can also think of it as, all the key aspects of running a business are in this physical realm because they're things that we have to do. Now, the emotional part of our being, and I'm one that I always hear this mind, body, soul, mind, body, spirit, and I'm always going, well, where's the emotion? Because the emotion's the piece of it that really drives a lot of it. The brain studies right now are actually showing that when we elevate our emotions, it creates an imprint. The emotions actually imprint in the cells, send chemicals to the brain and get the brain to think differently. When the brain experiences something, it sends chemicals down to the body, and the body begins to bring up a feeling. And so it becomes kind of a loop because the feelings will come up and make us think the same thoughts again. And then the brain will put out more energy down to the body, and the feelings still feel that way. That's why we get in these loops of mind chatter, where we get depressed or we get upset about something, or even if we get happy or we get a song stuck in our head maybe, and it's still producing the same kind of feelings. But the emotions are key, and they can actually be used to heal and cure. And in a business sense or in a community sense, the emotions are kind of the culture and the communications, the way we relate to each other. And when we create good communication in a business and we create a really exciting culture, we end up with exciting producing people. We have a lot of fun. And as that builds and builds and builds, it seems like everything comes to us so easily. When we get into the negativity and we feel that negativity, it seems like everything goes wrong. And there's a lot of conflict. So in a business, in a community, in a government, they all have that emotional piece, that culture piece. Then we move into the mental, the thinking part of ourselves. And mind is different than brain. Mind, our thoughts aren't necessarily in our heads per se, but the brain has a lot to do with it. And so we do have thinking that goes on and memories. Well, in business, or maybe in a city, community, something like that, that's going to be your planning, your procedures, the policies that you have, all the mental things you go through, creating strategies. Every time you dive into something using your brain, your mind, the planning, the strategizing, thinking about it, you'll actually even hear yourself say, let me think about that for a while. So, and then finally, the last part of this is the spiritual part of it. So in a person, you've got passion, you've got intuition, maybe your connection to God, that connection to this other realm. And in business, it's also there. There's a passion, there's a mission, there's a vision, there's a dream. Sometimes you just get downloads of ideas, crazy ideas. When we do brainstorming, I like to call it heartstorming, because I like to feel it. I like the feeling of the ideas as they come through and really feel them. And it's the same thing in designing or pulling, it seems like out of the ethers, what it is that you want to create. Just think about it and take a minute and look around you in the room where you're at. Pretty much everything here has started as a thought somewhere, or started as someone's passion, and they were able to plan and create and bring it into the physical, moving through each one of these areas until it actually became something that was manifest sitting in front of you. So as we walk around giving appreciation to all the other people's ideas and concepts and the work that went into it. And again, part of that is that financial piece of it. So let's switch slides again. So hold these ideas and concepts as we get more into playing with the numbers. So a lot of times business is described in anatomical terms. The management is sort of the think tank, the brain. Marketing's the muscle of it. Finance is the blood. The actual CEO or visionary might be the spiritual leader of the whole thing. But a lot of times we talk about finance as the blood. And just like blood, there's a flow to the finances in cash flow. And just like the blood, if our body is drained of blood, or if the blood is tainted, we're not well. We can even die. Same thing with a business. Same thing in a community and a government. If there is not that financial flow, then you literally end up dying. So without those financial aspects, the brain becomes uncommunicative and the muscles are unresponsive. If you don't have any money to invest in marketing, then that marketing muscle, that's unresponsive. Nobody knows who you are. If you don't have the money to invest in the management, into the planning, into the creation and the operations, they don't operate. So understanding the basics of this finance, including the proper control of cash, is totally essential if your business or even your personal life, even if your personal wealth is to survive and succeed. It's critical. Go ahead and switch. And it's a place, I laugh because my brother actually went to college and he now is, he goes out and finds venture capitalists. He goes out and finds money for businesses and he works in finance all the time. But did you know nobody along the line taught him how to reconcile his bank statement, his checkbook? I did it. He actually graduated from college and did not know how to balance his checking account. So understanding some of these things, making sure you're not losing money, making sure you're not bleeding out somewhere is incredibly important. So when building wealth, your balance sheet is your bottom line. Now I'm going to use some of these financial terms, and I don't know if you're really, and if you do have some questions, write it down because I'm going to go through these, and then at the end we'll do some Q&A and we'll run through it. So if there's a question that you have, put it down, and then we'll answer some in a little bit. So what's really important is that we know what makes up our balance sheet, our profit and loss statements. Even when you go to the bank and you want to get a loan or you want to get a mortgage, they want you to do a financial statement on yourself. And you need to know where to grab all these numbers and how to come in so that they understand exactly what it is and how much money you have, how much money you owe, and how much money you have to operate with. And basically, the balance sheet and the profit and loss statements are interconnected, and they're critical in building and maintaining your wealth. So how do you even know what you or your business is worth if you're not keeping track of your numbers? By creating and understanding these financials, you'll actually know. And I do some business consulting for people, and I got to tell you how many times I've walked into a business and they give me a box of receipts and they haven't reconciled their bank statement. And some of these people are doing okay. I mean, they're being profitable. But if you ask them, well, where are you making your money? They don't know. If you ask them, well, how much did you spend on extra stuff this month? They don't know. How much money did you take in cash and not record in your business? That's a big one. That's a really big one, especially for entrepreneurs, because the temptation is always there to take the cash and put it in your pocket and not record it on your books. And then when you go to the bank and you want to get a loan to get a mortgage or to buy a new car or something like that, and it's not showing in your financial statements. I tell everybody, record your cash and take it out and pay yourself. It's fine. A lot of people go, well, I don't want to pay any taxes on it. And it's like, you know what, dude, are you using the services that the taxes pay for? Do you drive on the roads? Do you use the utilities? Do you like to go out into the parks? You know, there's a lot of things that the taxes actually go to. I'm definitely one that thinks that there's bad spending and things, and sometimes the tax increases and different things really get me mad. But it's also great when you can go in and you can say, hey, this is how much I actually took in last year. This is where it came from. And this is what I need to build to make it change and be different. This is where I need to cut back. You aren't going to know it if you're going to pocket all your cash. So it's really important that you start sticking some of it in there. The other thing is paying yourself. Make sure, there's a lot of people, entrepreneurs, that don't pay themselves. And that way they don't necessarily get on a regular budget. They don't get on a regular schedule every month. They just take money whenever they need it. And that's not too good either, because you can drain your bank accounts before you know what you're doing. So pay yourself on a regular basis like you are an employee, because you're the one that's driving your company, or you're the one that's making it work, or you're the one who's actually wearing all the hats in the company. Go ahead and change the slide. You want to make sure that you pay yourself, and then if possible, stick a little bit of it into a savings account, even though it's not paying much interest, but you need to get it into things where your assets begin to make you more assets. So on this slide, I'm talking about starting a business and what it requires. And actually, I'm in the middle of a startup myself right now. And so it's really interesting going through all the pieces of a startup. But really, starting a business requires an idea, some self-confidence, some initial funding, and a lot of times a lot of research into the market, into who's doing what or how you produce it. That's one of the things that Kathy touches on in a lot of these sessions is, you know, how do you find your market? How do you look at your competition? And how do you interact with your clients? What are your clients looking for? That kind of stuff. So a lot of the things that she does deals with marketing and how to build a really good marketing plan for your business. Kathy, do you want to talk about that for 1 second about your classes?
No, it's okay.
Okay.
That's a fun subject, but thank you.
Okay. Well, I know she's got one that's coming out again soon on marketing, and she also talks a lot about social media marketing, which is incredibly important, something I was very weak on, so she's been extremely helpful with what I've learned from her. But anyway, staying in business and becoming successful also requires financial management. That's one of the critical pieces of it. So interpreting a balance sheet, a profit and loss statement, financial planning, they're tools. They're simply tools. And they help you control your life, and they help you control your business. They help them perform. And it helps you feel like things are under control and they're not wild and crazy and all over the place. You can feel that energy. It's like if you just close your eyes and think about, if you know how much money you have in a checking account, what you have available, or you know what bills are coming in every month. And if it's not you doing it, you know you have a responsible person who can give you this report. They can give you balance sheets. They can give you profits and losses. And you can just look at those and know where you're at. That piece of it, when things are in place, it's very calm. When things aren't in place and you can't answer the questions, it's very scattered. And it puts a lot of extra stress on you. So let's switch slides here. And we'll start getting into a little bit more of what's going on. So here's a couple statistics I wanted to share with you guys. Over half of all new businesses, excluding franchises, fail within the first 4 years. A lot of it is because they do not have enough cash to infuse into their business to get them up and running until they start making profit. The reason why franchises have a better bet of surviving is because all of their systems are in place. And we did a little class on systems a couple months ago, the importance of having systems. This financial piece is just another system. But when you buy into a franchise, you literally buy their marketing, you buy their name, that you buy the brand, you buy the systems, you buy a turnkey operation that you can step into in a market and just start working with it. And so you have a much better chance of success. The reason why other new businesses fail is because they don't have the systems in place. They don't understand businesses. They don't have the marketing. They don't have the cash flow. The next statistic is that another 30% don't last 10 years. And a lot of this is because it's a struggle sometimes if you don't have all your ducks in a row. Or they've gotten comfortable and they end up spending a bunch of their money, but they don't put enough away to make it through a downturn. And that's one of the things that you learn if you kind of study your market, that there are downturns or there's seasonal times of businesses. And you need to learn how to do that so you can flow your money properly. A lot of them don't go and get lines of credit, which if you have a business and you have the ability to get a line of credit, it's fabulous. Going into a bank, telling them how much you need, and knowing that it's sitting there in case you run into something. I don't necessarily say use it all the time, but if it keeps your cash, use it and then pay it back. But having that is incredibly important. Many of the survivors that stay alive, they stagnate without reaching their full potential. And a lot of times that reason is there because they've gotten bored. They haven't continued to grow. They haven't continued to learn. They haven't updated. I had a gentleman in a place where I did go to work because I wanted to learn, who did not want to put a computer system in. This was back in 2001, 2002. He didn't want to work with a computer. He wanted to do everything the old way. He wanted to do the marketing all the old way. And even though this business was alive for years, since like the 70s, when he didn't stay up to date, that business closed its doors in 2010. Because by the time he saw that he needed to update to stay in competition in the marketplace, it was really too late. He'd lost too much business. And then often a lack of capital is cited as the reason a business fails. Sometimes that's true. Sometimes businesses get hit with something they can't overcome. But many times it's been spent from the inside. It hasn't been financially handled correctly. And I just saw last week where Crocs shut down 2 manufacturing, the last of its production plants, one in Mexico, one in Italy. The CEO or the financial person is leaving and a new financial person is coming on board. And so it looks like there's going to be a big changeover. They haven't like filed bankruptcy or anything like that, and they may have enough background inventory to keep themselves moving for a while until they open up production again. But that business is one that grew so incredibly fast. They had a very difficult time of handling the success. And that kind of moves us into the next piece, which is ironically quick but uncontrolled success causes the downfall of thousands of businesses. And that's because the owners and managers were unaware of the financial reasons behind their success, and they blindly overexpanded. Sometimes there's like cash flow, and they expand and expand and expand, and they haven't put any money away to keep up the operations if there is a downturn. But not knowing why you're expanding, you might just be a cool trend, and then after a while the cool trend goes away, and sometimes that's a good time just to cash in and move on to something else. So hard to say. Go ahead and change the slide. So I'm going to go back to this again about money and financials. Play with it. It's all energy. Make it into a game like Monopoly. I remember Monopoly being a little bit stressy sometimes, but make it into a game, because it's like any good game. It's got rules, it's got tools and strategies that help you win. That's exactly what these financials are. They're basically tools and strategies that help you win the game. And so when we start looking at them that way, instead of this dreaded, oh my God, I've got to do my bank reconciliation, and that kind of thing, just plan it in, put it in there as part of your game, and make it fun. And sometimes when you spread it out over time, it's really cool to look at the growth that you've had. Even if it's been blind growth, it's fun to watch the growth. Then it's just like, okay, so how do I take care of this? How do I manage it? So we're gonna advance the next slide, but I want to see if anybody has any questions so far with this. And you can come off mute if you've got any questions or comments. Okay, so if I don't hear anybody, I'm just going to keep on going. So it's really good to understand basic finance. I put some little subliminal hints in there. If you notice the little hearts along it, it's good. It's good for your heart. It's good for your stress levels. So financial strategies and simple analytical tools, what they do is they help you discover what your business is doing compared to similar businesses. And that really helps in your marketing strategies. That really helps in knowing where you want to place yourself, or how you want to brand yourself, or who's the leader, what are they doing, how are you making money compared to how they're making money. I'm going to give you a for instance. When one of the businesses that my husband and I had was a cleaning and restoration company called Professional Cleaning Network. And when we sold it back in 1997, we were doing about $2 million a year, well on the way to go to 5. That's where our managers wanted us to go, was to 5 million a year. And we always did comparisons, looking to see what the businesses, what other businesses in other areas of the country were doing financially. And there were ways to find those things. And then we kind of studied what our market was doing. And it was like, oh, these competitors, they're doing all the apartment buildings. Or these competitors are really into everyday residential kind of work. And we decided that our strategy was high-end residential and Class A buildings, which both have a lot of money involved. They need to look good because of where their status was. They're willing to pay to look good. However, we could make a lot of money in a little bit of time in those, but the amount of money we needed to spend on training, the amount of money we needed to spend on little tweaks in our business, in our brand, in our marketing materials, in just in the way we did business, had to be exceptional for those people to buy. And so when we could look at what our business was doing comparing to other businesses, it helped us develop a strategy in the way we wanted to grow. Another thing is determining where you are financially, whether you're making progress each quarter or each year or each month, and understanding why. That's critical both personally and for your business. You want to know where you're at. You need to determine this. So these tools help you determine where you're at. And it's also, you use them to develop this financial plan for the future and help you make choices. When we looked at that particular business, and we looked at what was going on around us, it was a really ripe time to sell. And we had to take a look at it and say, okay, what's our business valued at? Well, because we had a lot of contracts from both, we developed contracts on both the personal, like individual residential high end, where we were going in monthly, and we also developed contracts on the business end where we were going in monthly, but we were actually billing. We weren't always doing the work monthly, but we were billing monthly. That kept our cash flow really steady. It was really nice to have this steady cash flow. It made us extremely, extremely a good prospect for a buyer, because these things were there in place. That piece was steady. The piece that wasn't necessarily steady was the restoration work that we went into, because restoration occurs when you have floods, or you have fires, or you have vandalism or something like that, and it can be there and it may not be there. And so this was a way that we chose to sort of juggle how we juggled our money. So anyway, it's important for any business or business owner, old or new, to really understand where their life and their business is, as to whether it's making money, how it's making money, where it's not making money, how are you spending it. So that's the function of finance, is to get you to understand where these things are going. And budget is not a dirty word. Budget's actually a really great thing. And you can use it as a tool, especially when you get 100 million internet marketing people or phone solicitors calling you, or people showing up at your door, and you can say, oh, that's great, but it's not in my budget. I'd be happy to take your information, and when I sit down to take a look at this particular thing in the future, if I'm interested, I'll give you a call. Thanks for coming by. And you can be really nice about it. You don't have to hang up on them and slam the phone or slam the door or whatever, but you can basically just say, hey, it's not my budget to do this right now, and I'll be happy to talk to you later when it is. So that's one way of using a budget. But it's also a fantastic tool to predict. When you can get your numbers, it's easy to predict where you're going. And and a lot of times you're surprised at how much you spend. I hear so many people that do personal budgets, and when they sit down and figure out how much money they spend on alcohol, or how much money they spent on going out to dinner, how much money they spent on playing, sometimes they're really appalled by it. So it's really about knowing and going in and making an educated choice. And that's what all of the work that Kathy and I are doing is really bringing awareness and consciousness. And consciousness is really bringing awareness to something so that you can make a choice and you can take action, not react. So let's go to the next slide. So we're going to start getting into building wealth by the numbers. And basically, there's going to be a couple of things we're going to talk about. The two main financial statements, learning about these two financial statements, a balance sheet and a P&L, and how they're prepared, how they're used. And then the second one is talking a little bit about using ratios, proportions. That's for business, analyzing your business and comparing them with others in your industry. And a lot of those, if you use something, I know when QuickBooks, when it was Quicken, when it first came out, I hated that program. I was used to using really powerful accounting software packages that did not allow you to go back and alter things once you posted them. They were posted, and the only way you could change them was by making a general journal entry to change them. When Quicken came out, it didn't have QuickBooks is getting a lot better. A lot of people use it, and I finally gave in and bought QuickBooks and started using QuickBooks. Personally, I use it. I do books for 9 companies right now, and I use it for the 9 companies, and I also use it for my personal stuff. I just log everything right in there, and it gives me the numbers I need at the end of the year. The other thing that's really cool is it syncs with TurboTax at the end of the year. So you can literally buy TurboTax if you're feeling comfortable enough. You can buy TurboTax for business and do your own tax returns, which I do all the business tax returns, but I bring my personal ones to an accountant only because I've got some LLCs and some S Corps that I work with, and those numbers, when you're working with an S Corp, if you own an S Corp or an LLC, the income rolls to you personally. So the same as a partnership or a sole proprietor, it rolls to you. And so I like talking to accountants when I start combining all of these, but I do all the tax returns for the businesses. Anyway, this particular program, QuickBooks, will help you build your own financial statements. It will help you build your own ratios and comparisons. So when you go digging around looking for market comparisons, you can see what your industry's doing. You can see how you compare to what others are doing in your industry. And it's especially good when you want to look at sales and the cost of goods, because you want to keep your cost of goods within a good ratio so that you have money to work with for your other expenses. I don't know if you watch Shark Tank, but they'll ask the people on Shark Tank, what's your number? How do you produce this? How much is it? What's the ratio, or what's the percentage of your sales has to go into the production of this? And if people can't tell them that, none of them want to work with them. So these are really, really important, especially if you have a business that you want to bring some investors in or partners or something like that. Let's go to the next slide. Okay, so step 3 is how to logically examine your expenses. It's critically important, especially if you're not hitting the sales volumes that you predicted. Lowering those expenses may be the only way to survive. And the easiest way to explain this, if it's not for business, it's kind of like if you lose your job, the first thing you're going to do is go and take a look at what your expenses are personally and figure out what you can afford to cut while you're going through that time of no income coming in. Or if someone gets sick and they're out of work and they can't, and it's for an extended time period, and your medical bills are going up, or even if another person is and you're still working and your medical bills are going up, you may have to look at lowering other expenses. So it's really critical to take a look at your expenses and figure out which ones are critical, which ones are the must-haves, like you don't necessarily want to turn off your electricity and your water, but you may be able to turn off your cable TV or cook more meals, or not buy as much stuff for your house, or not spend the extra on fun toys and gadgets for your business. you really need to take a look at those, because expenses can put you out of business and expenses can put you into bankruptcy, especially if you're not making your sales targets that you're predicting. So your expenses really needs to be built around what you think you're going to bring in volume or in salary, unless you have a stash of cash that's earmarked specifically to grow your business or to spend on your house. You may have put some stuff away for a rainy day, and you have that extra cash, and you know you can flow through the time. So really look at expenses. And you can put them down as the necessaries and the I'd really like to haves, and this is just a whim because I like to play. But it's really critical though, when you think about it though, you need to have playtime. And one of the trainings I was in was taking and seeing if you could get your expenses down to a place where you were working monthly on 50 to 60% of the income you were bringing in. The rest of it that you were bringing in, you would take a chunk of it, like 10% of it, and put it into long-term savings. Like you're not ever going to touch them. You would call it your financial freedom account, but you were going to take that money and put it in there. Then you would take another 5 or 10% and stick it into this savings long-term. It was kind of more of an emergency fund. Then you'd take 5% and put it into an educational fund for you. This is money to help you grow. Then there would be possibly another 5 that you would put into play money, and that was your play fund. And that was the money that you'd spend if you wanted to go out to a movie or you wanted to go do some other things, go out to dinner, whatever it was. But you just put that money, literally take it in cash and put it in a jar. So it's sitting there, so you see the cash. And then there was one other fund that we used as well. And but you can label these jars that way. The important ones were to put in for the savings and making sure that you had money for play. And you can figure out your percentages. You can see, even if you can only put $1 a day in, putting $1 a day in, invest in you and build it up. You might try, there's actually a great little exercise. It's kind of a fun one. Start out with a couple dollars and you have to spend it. So what are you going to spend it on? It's hopefully for your business or personal development. The next day you double it. The next day you double it. The next day you double it. And you keep doubling it. You can start out with $100. Figure out what you're going to do with it. And you're doing this more mentally. You're kind of keeping a journal and writing it down. What that does, it allows you to think a lot bigger. Like if I was making, if you got it up to $500,000, how would you spend the $500,000? Or if you were making $1 million a day, how would you spend $1 million? And come up with all those ideas. What would you actually do with it? I actually loved going to there was actually a really fun group of people, and all these, they were the wisdom keepers. And the wisdom keepers were all up on a stage. They were all adults, and there was a 15-year-old boy who had his own passions. And all the adults talked about what their passion was, what they were going to raise money for, and what they were going to build. And then someone in the audience got up and said, and I don't know if some of you may have been at this, it was actually at an Arise festival up in Loveland. And someone said, And this was before Donald Trump was elected, but he said, Donald Trump flies in, lands on the lawn in a helicopter, comes in and says he's going to give like $15 million. But the only way you're going to get it is if you can spend it in a year. How are you going to spend it? Every adult was tongue-tied.
Wow.
The young man, the 15-year-old, went off. This kid was a dreamer. He knew exactly where he was going to go, where he would take the money, how he would use it, how he would build out his plan. And it was amazing to see. So, you know, the point of this is that a lot of us as adults don't spend the time in the dreaming. We don't envision, we don't see it as big. We see ourselves locked in this little box of this is how much I make, and we think little. And the idea is think big. If you were given $1 million tomorrow, but you couldn't just blow it on junk, you actually had to put it into some useful something. What would you do with that money? How would you serve the world? And then step 4 is learn proven methods to control your business. So learn about cash flow analysis, learn about trend analysis, learn about business planning, because this finance is only one part of a business plan. The marketing plan is another part of the business plan. And the monies that you budget in a marketing plan get put into the financial plan, which gets put into your overall budget for the year. And the financial planning, but the business plan, and we'll probably do something on writing a full business plan somewhere down, you know, like the components somewhere down the road, because it really is important. And when you have a business plan in hand, and you can call up a banker, like find a personal banker. My favorite thing to do is find a smaller bank where you're important. Not one of the gigantic banks, unless you're traveling all over the United States and you need to be able to deposit money wherever you are. But find a local bank that you can go in and introduce yourself to one of the people and say, this is, you know, here's who I am. And you lay your plan out in front of them and say, here's what I'm doing. And they'll ask you, how much do you want to borrow? And we would say, nothing today. We just wanted to meet you. But we'll come back and we'll talk to you again, and we'll let you know what our plan is and how much money we may need in the future. And we might talk to you about a line of credit or something. Bankers love people like that. Love people like that. And they will bend over backwards to help you if you know what's going on and you can give them answers. Okay, switch the slide. So basically, understanding the financial statements are going to teach some fundamentals. They're not going to make you an expert. The idea is to clear up the misunderstanding so that you can talk with a CPA, you can talk with somebody else. They're tools that help you manage. And the one thing is, as a business owner, if you do have a business, especially if you have employees or you're working with other people, you want to be able to sit down and understand where the money's going. And you may not need to know how to compile. You may be able to hire someone that's really trustworthy to do it for you, but you still need to understand what's there, and you need to see if there's something missing. And I learned that lesson really early on, because the person who was doing our financial statements was embezzling from our business.
Oh, no.
And when I got my hands on the bank statements and started reconciling, I couldn't get things to reconcile. And he kept saying, oh, no, you don't need to do that. You should just be home with your kids and everything's going great and stuff like that. And it went a couple months, about 2 months, and he was actually trading our accounts receivable that were coming in for gambling debts and hiding it in the numbers.
Wow.
But things weren't coming out right. Like the bills were still coming in, even though he was showing that they were paid. So you wanted to get a handle on this, because I'm not saying you don't trust everybody, but you don't trust everybody. So you want to be able to audit, and that's critically important. So let's go on to the next slide. We're going to start learning about some of these basics. Go slide, go. There we go. Okay. So what we really want to do is minimum competency here, learning the basics so you have success. It's not always the lack of the product knowledge or the failing to put in the long hours. More of it, it's not knowing about your financial situations. And so to achieve this minimum competency in finance, it's essential to understand a balance sheet and a profit and loss statement. So those are the two that we're going to focus on right now. And we're going to basically go through them. So this is sort of the real mental piece of this. So let's switch slides, and we're going to talk about these sheets. So here's the real basic of a balance sheet. You have your assets minus your liabilities. So it's the stuff you have, the cash, the buildings, the cars, whatever, minus the liabilities, what you owe to everybody, and that equals your net worth. So that's what the banker is going to look at. How much do you have? How much do you owe? Subtract one from the other, and that's what you're worth. So go on to the next one. This is more of an anatomy of the balance sheet. And it's called a balance sheet because it really needs to balance at the bottom, and I'll actually show you one on the next slide. So we talked about assets. The first part of the assets is current assets. And current assets, pretty much anything that gets converted into cash really quickly, like within a year. So you're talking about all your bank accounts, your savings accounts, the accounts receivable, monies that people owe you. Those are really liquid. You'll hear them use the term liquid. So that's basically what your current assets are. Fixed assets, on the other hand, are things that are much more major, like your equipment, your buildings, your cars. You're not necessarily going to convert them as quickly if you needed to get cash. They're pretty much fixed, permanent items. They're usually the ones that you have to claim depreciation on. Or now they've got all kinds of things like the 179 deduction for depreciation, which basically means if you purchased an asset in that year, you can claim all of it instead of depreciating it out over 5 or 7 years. So you can, if you don't understand what depreciation is, it's basically you're expensing it out. Instead of saying, okay, I bought this, and I think the rule is still about $600. If you buy something major over $600, they put it on your balance sheet as a fixed asset. And then if you don't take that 179 deduction where you can pull it all out and expense it like you would normally if you bought like ink or paper or something, you can only take a percentage of it, like 1/7 or 1/5. And you could do that over those years. You expense that out over those years. So you get just a little bit of the deduction, not the whole thing. Those two things, and then there's also some other assets which might be goodwill, which might be ownership of a trade name or a brand. It might be the value of insurance policy, like Keymen policies or something like that. Those kind of things could be goodwill. Those are also considered assets, and they'll be on the asset side of your balance sheet. On the liability side, you've got current liabilities, which are your bills and your debts that are owed within a year. They're not long-term debt like mortgages or car payments or something like that. They're short-term, pay them off quick. Accounts payable is one of them. And those are things that you owe on account to people if you've got accounts anywhere. And then you've got your accruals, which are like tax withholdings. So if you're withholding taxes from employees, those are going to be considered a current liability. You only get to hold on to them for a super short time, and then you have to send them into the IRS. So tax withholdings, FICA, federal, state, Medicare, those kinds of things are all accruals. And then also the long-term debt, which is your mortgages or your notes payable. And you basically, in order to put in the long-term debt, you really need to have a note along with it, which is great. Otherwise, they're probably accounts payable and revolving credit cards and things like that. And then finally, when you take those assets and you subtract what you owe, you come up with your net worth. Or on some balance sheets, it's called the equities. It'll show retained earnings. Retained earnings are the earnings from past years. And profit and loss will show up as what you made this year. So you'll be able to see both. And that profit and loss line is how the P&L or the profit and loss statement ties in here, because the bottom line number there gets added into this profit and loss on a balance sheet. So basically, assets minus liabilities equals the net worth, or assets equal liabilities plus the net worth. So go on to the next page, and there's a sample of a balance sheet there. There we go. So on one side, again, you'll see the assets. So the current assets, they've got cash and petty cash. Petty cash is an asset. You do keep track of that. This particular one had temporary investments, accounts receivable. Inventory is also an asset, the inventory you have on hand, or any supplies if you keep a lot of supplies on hand. Prepaid insurances are considered that. There's also investments are an asset. And then they're also showing their the hard assets or the fixed assets, the land improvements, the buildings, the equipment, less that of depreciation. One thing about depreciation though, if you sell the assets, whatever you've written off in depreciation, if you've written off a bunch and you actually receive less, so let's say you had something that was $1,000 and you depreciated off about 300 of it, but then you sold it for $5, there's actually a $200, there's $200 in there that you, or the $300 you might have to claim as income because of the difference. So you always have to know when you're playing with depreciation and you're selling assets, you may have to pay on the depreciation you've already written off. Then also they've got intangible assets or the goodwill assets that are there, and the trade names, those kind of things. So as you can see, that column, when you add up all the assets, they have $770,000 as their assets on that side. So if you look over on the other side, and we'll cheat and go to the bottom, the total liabilities and stockholders' equity is also $770,000. Thus, the reason why it's called a balance sheet, because those two numbers are exactly the same. But let's go back up to the liabilities. Current liabilities, those are the notes. They've got notes payable there. A lot of times they're under
Accounts payable.
they're under long-term, but it depends on if they're short or long-term, if they're more than a year. Your accounts payable, your wages payable, if you hold back wages for about 2 weeks, It's probably good to book them in there. Interest payable, if it's calculated, the taxes, the withholding, all of these kind of things end up under the liability portion, along with your notes, mortgage payments, other debts. These guys have bonds payable, so they probably issue bonds to raise some funds, and they're going to have to pay back those bonds at some point in time. And then the equity piece of it, you can see common stock where they sold stock. Sometimes you'll see additional paid-in capital, extra money that people have put into the company, but maybe it's not stock. The retained earnings, again, is the earnings from previous years. And then the treasury stock, I have to see, what does that one say? Accumulated other comprehensive income. So they're keeping track of some other income that's being brought in on under equity. Treasury stock is stock that you've brought back in, that you've bought and you're still holding, you haven't reissued. And then there's a stockholder's equity. There's also in that is the net earnings for the year, which might be the accumulated other comprehensive income. I don't know what kind of balance sheet this is, but they may also be putting their profit and loss in retained earnings. Most balance sheets keep the profit and loss for the year to see where you're at. And let's scoot to the next slide.
Oops. There we go.
Okay, so now we're getting into the profit and loss statement, which is sales less the cost of goods equals gross profit less expenses equals net profit. So let's go on to the next and we'll take a look at how that all works. Okay, so again, we're talking about the anatomy of it. The profit and loss statement actually shows the actions over a period. A lot of times, some people will do it on a monthly, quarterly, they'll do a monthly, a quarterly, and a yearly total to take a look at it. Most P&Ls are done on a monthly basis. So when you reconcile your bank statement, it should match the cash on your balance sheet. And all the rest of the activity for the month gets recorded. And then you find out how much you made that month, whether you had a profit or a loss. And in a lot of cases, this is called an income statement as well. In profits, in nonprofit corporations, they usually hold reserves. They don't necessarily always, it's like addition to reserve or a loss to the reserve or something like that. They don't like to put profit and loss. It's usually an additional or something to a reserve. So part of the profit and loss, again, is the sales. So we're talking about product sales or service sales, service income. In Colorado, you have to collect the sales taxes on product sales. You don't necessarily have to collect on service income, which is really nice. Other states, if you end up moving to another state, you need to check it out because some states do tax service income. And rentals, if you're doing rentals, it's really interesting to look at it because if you paid sales tax on the rental, sometimes you don't have to collect sales tax on it if you're renting like a piece of equipment. But if you're renting, if you didn't pay the sales tax, or in some states you're required to charge tax on the rentals. So that one's a little bit different too. So you've got your sales number, less your cost of goods sold. These would be considered direct costs of doing and manufacturing the product or providing the service that you're doing. And you have to determine what those are. So if you have specific things in operations, like you've got gas and oil for trucks, or you've got some specific employees that work in fulfilling all of those kinds of jobs, they would go under a direct cost of goods. In doing the service work, it may be some of the tools that you need, small tools and equipment might go under direct cost of goods. A lot of supplies that you just buy on a daily basis to provide your service that's specific to the jobs would go under that category as well. So if you take your sales less those cost of goods, you get your gross profit. And then you start expensing out. They have SG&A. So it's sales, general, admin. You'll see on some forms where it says SG&A. And so what we're talking about is costs of advertising and marketing, general overhead, like maybe rent, those kinds of things, and administrative costs. So if you've got people that are doing your bookkeeping or they're doing your answering the phones or different things, you need to determine where you're going to put those kinds of costs. Depreciation shows up there also. Costs for your computers, unless it's a specific piece of equipment that you use to perform your job on site or something like that. Professional fees, you can see them all there. So these are all general and administrative, and you can see that in a lot of cases, the cost of the product sold is in direct relationship to the product sales, where these general and administrative costs are going to go on whether you have a sale or not. So that's one way of determining. And when you take those expenses out of the gross profit, you come up with your net profit, and that number is the one that gets moved over onto the balance sheet. So let's go to the next slide. There's a couple illustrations of a P&L.
That's a high cost of goods sold.
Yeah, so they've got their revenues there, and they did their balance. They did it a little bit different in the way they put theirs together. They've got their sales. They've got some interest revenues. A lot of times interest, unless they're actually collecting interest on a product or something that they're selling, it wouldn't necessarily go there. If it's interest from bank accounts, or maybe the gain and loss on a sale of an asset or something, that'll get listed in a separate category on a profit and loss. This one's a gain. You can see the gain on sales of assets. Usually, and I've got a different one to show a little bit more, usually you've got basically your sales, and the interest you're earning or the gain on your sale of assets would go under other income or loss. It'll have its own little line, and it'll either get added in at the bottom or subtracted out. Generally, it goes sales and revenue, then it'll do cost of goods sold. So their cost of goods sold is actually costing them 3/4 of what they take in on a sale. So basically, if they sell something for $1, it's costing them 75 cents to produce it. And that really is high. It doesn't leave them a whole lot of extra for marketing or development or research or office expenses or any of those kinds of things. But, and those would all be under the SG&A. Let's go over to the next slide. There we go. This one's a little bit more traditional. It's a little bit more in line with like the way QuickBooks would spit it out for you. And when you go into QuickBooks, you're going to have to tell when you're loading everything in, you have to tell it whether it's an asset, whether it's a liability, whether it's current, whether it's long-term, whether it's a sales, whether it's an expense. There's categories that you'll check off so that you build your financial statements. But they've got net sales. You can see their cost of goods are not quite as high. And cost of goods can be high, especially if you have payrolls in there. If you've got people working, or a lot of production costs. You can see how the sales less the cost of goods gives you your gross profit, and then they just have it listed as SG&A as $100,000. So their rents, their utilities, their professional fees, their advertising, their marketing, everything is going to be in that SG&A category. And then they come down to their income before income taxes, $50,000. Now, Kathy, and I totally agree with what she said, this is the numbers that we always used, was under that SG&A, about 10% of your sales should go back into marketing your company. That's the number she used. That's the number we always used, was like the 10%. Sometimes you're a little bit up, sometimes you're a little down, but when you're doing your budgets, that's a really good number to use based on what your projected net sales. And here, they're probably a corporation, so they probably have to pay income taxes separate from individual ones. And so they've actually calculated about almost 25% for their income taxes. And then they have a net income. As you can see, they budget for the taxes they need to pay. So their net income is $38,000. And so they've got about a 19% profit out of their whole sales. And this is how you can look at that and say, wow, I really want to show 20% as a bottom line. Where do I cut? How much more sales do I need to do? This gives you the opportunity to decide what you want to do, and then you start tracking the numbers to see what you actually do. So you'll see a lot of income statements where they have the budget number, they have the actuals, and then they have a column next to it for variance. So you can see the difference, and they'll even build into it percentages. So you can take a look at the percentages and you know exactly how much of your sales you're spending on all these different things. So doing these comparisons, whether you want to do them from year to year or you want to do them month to month, is your choice. But doing a month to month is really helpful. So let's go on. We're getting to the end of this. And the other pieces that are included in a financial plan are assumptions and comments. These are things that you would actually put into a business plan. If a starting balance sheet, if you're starting up for the year, with your projections, your profit and loss projections, where you're going to end up, a cash flow projection, how much cash am I going to start with, how much am I going to end up with at the end of the year. Because even though you show a certain amount in profit, doesn't necessarily mean you're going to show that much in cash, especially if you're working with receivables and payables, because those are what they call accruals. So they're out there, you put them on your books, but you don't necessarily have the cash in hand, or you haven't necessarily put cash out of pocket yet. Your credit card expenses basically would be an accrual, whatever the balance is. It's on your sheet as money you owe. It's a short-term debt, but those are listed kind of like under accruals, and you can do cash statements or you can do an accrual statement. So a cash statement, you're only going to be working with the cash on hand. An accrual statement, you're going to work with the monies that you still have out and the monies that you owe. It's your choice how you want to get your statements out of these computers. And you can actually do it as an accrual and then add in and subtract out and come out with a cash number anyway. Balance sheet projections are talking about the future. Where am I going to be in the future? What are my assets going to look like? What are my liabilities going to look like? We used to do those projections, like if we needed to buy a new truck, buy a new piece of equipment, we'd actually project it on our balance sheet. We'd actually project the month we were going to do it in. So when we did our budgets for the year, we did all those kinds of projections and we worked off of those and we took those into the banker and said, hey, here's what we're going to do. In August, we need this. So we're going to come to you in July to get a loan and we're going to start looking, and we'd really like to have like a letter of credit or the loan in place before we go in and we buy the new vehicle that we need. And it was so much easier to be able to walk in and see what you want, and basically, because you already had that financing set up, be able to just buy it on the spot if you liked it and not have to sit there and wonder if your loan's going to get approved. Totally different sense or feeling of the energy of it. So each one of these are in a financial plan. It's a piece of what you would put together to bring to a banker to get a loan. When you have those numbers already put together, it's really easy to fill out applications. And again, we talked about the ratios and analysis. So we're coming right down to the end of this. We can go to the next slide. So this is kind of a little bit of a summary. When you choose to know and manage your numbers, what you create is a change of perspective from one of always being in a victim mode, like, oh my God, what's going on with me? What's going on with my finances? I can't seem to get things to work right, to a creator mode where you're saying, I know I've got this in the bank. I know this is what I'm going to spend. I've got this extra. I think I'm going to invest it in this, or I think I'm going to build out this. I think I'm going to stick this into more marketing and jump into a different sector that I haven't been in, or something like that. It also changes your perspective from reactionary and sweating it and saying, oh my God, where am I going to get this money to do this, to a place of where you're actually taking action and you're making those choices, saying, this is what I planned on doing. I've got my cash in hand. I still want to do it. So I am. And I'm going to take action on it now. And that's really the way that you begin to build wealth, by the numbers. Because when you have that control over what your numbers are, you have the opportunity to take it and say, I've got this extra cash. I'm going to go invest it over here, and I'm going to make a little bit more money. Or I think I'm going to diversify my business and add this. Or I think I'm going to go buy another hard asset, like another house, and use it as a rental property. Or maybe I'll buy a building to put my business in, and I'll pay myself rent. I'll start a new company, a rental company, that'll collect my own rent, and I'll pay my own rent, and I'll pay the mortgage on it over there, and I'll take the deduction for the rent off of this business, and the income will be over there. And it's an LLC, and it flows to me, and I'm taxed at a lower tax rate, or something like that. These are all the strategies you can work with when you actually know where your numbers are and what you have and how you want to work with them, instead of kind of running by the seat of your pants and being the victim and it being in reaction mode. And so I think we've got one more slide, maybe.
Yep.
Yeah.
Here we go.
And so I really wish you all the best in creating your wildest dreams with this. And Kathy and I both have great appreciation for you being here, left some time for questions and answers or discussion. And we really want to send you a lot of love and blessings. This is our contact information. I do business consulting, and I also teach a lot of other aspects, especially along the lines of energy and balance, creating balance not only in your life but in your business and things. And Kathy has some really great marketing programs that she's rolling out, along with the fact, and you can tell them what you do, but a lot of it is book launches and getting you out there in the world, branding, that kind of piece of it. So we can kind of open it up for discussion now. And I'm just really glad you guys joined us tonight.
Okay, so what I'll do is unmute everybody. Oops, Larry didn't unmute. Nope, that didn't work. Let me stop. Let me try it this way. There we go.
Cool.
And now, let's see. Well, I got Erica to unmute, but nobody else is.
They have to do it themselves.
Orlin, there she is.
There you go. So does anybody have any, I saw Marcus's little thank you. Anybody have any questions or particular things that they want to know a little bit more about or something that they want to share?
I can't unmute him.
So, okay, I'll ask a
Yay.
question.
Thank you.
So I mean, I've thought about starting my own business for a while, and I'm finally getting into where I feel like I actually know what I want to do. I would say like how does what you're talking about apply to running a business entirely online, and like because I felt like a lot of things that were mentioned were like based on having a brick and mortar type business, whereas having an online business of one person is simpler in a lot of ways. So I don't know if I could just get your insight on that.
Sure. An online business, you're still going to have sales. You're still going to have, whether it's a product that you're selling online or whether it's a service you're selling online, you're still going to have some income coming from that. And there's still going to be costs associated with it. So if you're producing products to sell online, you're still going to have your cost of goods sold, what it costs for you to produce them or ship them. Even if you have, if it's like classes or something where you've got online teleseminars or something like that, you still have your costs of the technologies that you're using, and you can write off your computers. You can have those as your hard assets. You can write off rent in your home if you're working out of your home, but you need to be careful with that and say that this particular area is my office and this is what I do. And you need to be able, you can actually take percentages of your, based on the size of the area you live in. If say 10% of your house is your office, you can take 10% of your utilities as an expense. You can take 10% of your electric as an expense. You can find those kinds of expenses to write off against your sales, and it helps you pay your bills at home at the same time. It's quite creative working out of your house, but you do need to be able to say, this is my office, this is what I'm doing, and this is what I do here, and this is what I use it for, in order to claim a lot of those.
So
yeah, go ahead.
when you say claim as an expense, does that mean you're just not paying taxes on it? Or, what does that mean?
Basically, when you set up your books for your business, every month you would take 10%, say you're going to pay yourself 10% of what your utilities are, and then on your books, you're going to write them off as an expense for your business.
Okay.
So basically your business pays the bills rather than you paying yourself and then paying the bills.
Gotcha.
So if you buy software or you need to I buy a lot of apps to make my life easier online with the online business. And so all of those things are considered expenses. against
Okay.
them, right? So that way it's you have to be careful, but I think, what kind of business, Marcus, are you doing?
Video production.
Oh, cool.
Yeah.
That'd be great. So you would have things like cameras and lights and editing equipment and different things, software and stuff like that you're going to need, and all of those kinds of things don't need to come out of your pocket. They need to come out of your business, and that's just one of the nice little perks of having your own business. Now, I've had friends who like write off everything to their business, all their food, like all their laundry detergent and everything. And I finally said to them, stop it, because they went to the bank and they couldn't show any income. I said, do it what's fair. There's some things that you live, at home with, and these are the things you use, but you certainly can write off like business lunches and client meetings and things. Just make sure that if you do a business lunch or something like that, and you've got your receipt, you get your receipt. On the top of it, write who was there and what you talked about, and then save it, and it's a good write-off.
So that will shut down in about 10 minutes.
Gotcha. Thank you.
So, do you have another question?
No. That was insightful. So thank you.
Okay. There's probably places you could Google or you could look at. One really cool thing about QuickBooks is that it gives you sample. If you buy it and install it, it'll give you sample sheets for your particular businesses, so that you don't have to try and figure out what categories and things like that. And it'll help you create. I've been doing this long enough that I just create my own, asking the questions, but they do give you samples, so you're almost like up and running right away. You just have to decide if there's other things you need to add.
Okay.
And the coolest thing would be if you started making enough money that you actually bought a building that had your office in it for you to work out of, and you could rent out all the other spaces to somebody, to other people, and create your own little, workspace environment, and let the other people pay your mortgage payment, plus you bring in a little bit more extra income.
Getting a little bit into the real estate game.
She used a Monopoly board in her presentation.
Yeah.
So that was a hint.
One of the things about being an entrepreneur is trying to figure out how many ways you can pay yourself or have other people pay you. And so it's really thinking out of the box. We actually built, when we had the restoration company, when we did the restoration work, we needed equipment for that, but we didn't have the work all the time. So we started another company, and we bought a whole bunch of drying equipment in the other company, and it was always available for us to rent from. One of our companies could rent from the other company, but then we also had a whole bunch of other clients that rented from us. And they basically paid for the cost of the equipment and things, and we had it available, and we didn't have to take it out of the operating budget of the other business. So that's one of the cool things about being an entrepreneur. It's like, how creative can you be?
That's really difficult to channel that creativity into the business running side as opposed to the actual creation of like some type of creative project.
Mm-hmm.
So yeah.
Well, it isn't that much different than project planning. It is different than art, because art uses imagination, and this is more linear, I guess, or you know,
Structured.
more structured. But it isn't much different than putting a project together where you
Mm,
figure out what you need to do and you check off a list. It's very much like same brain function kind of.
The cool thing about understanding how a business works and each one of these different aspects, whether it's the marketing plan or the financial plan or the business plan, whatever, and you learn how to work that, you can use those skills in any business. And when you see people like Richard Branson, and some of these other wizards that are out there that have just built multi-million-dollar empires, they're actually very creative people, but they learned the business side and the smarts. They don't do any of that themselves, but they certainly get their reports put down in front of them, and they just look at the numbers and say, hey, this is what we're going to do, let's go with it. And they spend most of their time creating. So it's just learning the basics, and you get smarter and smarter over time. But just like any skill that you get, you kind of have to dive into it and spend a little time with it before it actually starts, reaping a lot of benefits for you.
mm.
But if you're thinking about getting into a business, this is something that is critical to learn.
Yeah, I've been procrastinating.
I get it.
Yeah.
I had a husband who just would come up with these crazy ideas, and he was like out the next day starting it. And I was one that was always going, wait a minute, what are you talking about? And he would come up with all the answers of what he wanted to do. And then I'd go, okay, fine. You've thought it through enough. So I get that piece of it. And I have to say, after being an entrepreneur for over 40 years, it's spectacular. It
Is that
really is.
why Kathy muted me?
I did. I did.
Eric, do you have a comment?
Did you have a comment? You're all black and
I'm looking good.
yeah, you're looking very thin and trim.
That's all I had to do is get on video. That's pretty good. My only comment is that if you have a dream and you can plan out the steps to implement it, sometimes you just have to go for it.
Yep.
And it may be, you might be one of those people, Marcus, that you just know that you need to collect these different things, and you end up hiring yourself a bookkeeper that takes care of your books every month so that you can just take a look at, they can help you reconcile things, and you look at your numbers and stuff, and then you call it good.
We lost Marcus.
We did.
Yeah, it sounded like he might be in a coffee shop or somewhere.
Yeah, that they were going to shut him down.
Yeah. So Laura Lynn or Erica, do either one of you have a question?
Oh, I'm just muted because I have an unruly child making a lot of noise. So
Oh,
anyway,
That's okay. I've got nine unruly grandchildren that I'm really used to having around.
thanks. I have just had my business on hold for various reasons for the last year. And so this I just thought would be really helpful to kind of get me thinking along lines of how I want to revamp when I step back in again. So it was a lovely seeing you, Kathy.
wonderful. Thank you, dear.
Helpful. I really appreciate the perspective, because probably almost everyone starts out as being a creative person that doesn't want to look at numbers or think about any of it. And so I could become a grown-up one of these days, and this was very inspiring to do so.
Well,
Yeah.
you're a genius at what you do. She does feng shui, interior design. Boy, she's magical being and magical.
Fabulous. Did she do your place?
She did my old place.
Your old place. Yeah, that's pretty cool. I mean, I work with energy, and I totally get the feel of it. Like when we do meetings and events and stuff, we do different things, and it's like setting up the stage, and walking in and going, oh, that is so not right, you know. and and it's like, it's nice when it gets settled, or you have the right colors and the different things, and pieces in the right places. And I get that, you know, this is about energy, and it's about working with energy.
Mhm.
And when you're working with your business, you know, even if you want to revamp what you're doing, jump in with 2 feet, a lot of these things, there's a great book by Michael Gerber. It's called The E-Myth. If you have not read that, it is a spectacular book. We used to work with Michael, and this concept of the E-Myth is about the entrepreneur. And the main thing is that most entrepreneurs start out as what he calls the operator. They start out as the creative person, or the person that has the ideas, but you know, they know how to do it because they've been doing it and they're really, really good at doing it. And then, but you also need that administrative person, which they soon find out that they have to take care of their books, and they have to take care of, you know, all the administrative pieces that go along with their business. And then the other part is the dreamer. It's the person who comes up with all the ideas and concepts and visions, and their mind is always constantly going. And the one thing he teaches is that you can always hire operators and train them the way you want them trained. And you can always hire the administrative and get or train exactly what you want. But you can't hire the dreamer. You can't hire the visionary who sees everything. So like with Steve Jobs, when he first started doing the things he did, he had these dreams. He was the technician dude working on the computers and coming up with all of it and doing everything and wearing all the hats. And as everything grew, it was like instill the culture, hire the people, grow it. But he still needed to understand how to market something, or how to build the finances, and what the business plans look like, and how to report to his stock people, you know, all of his stockholders. So, but most of his time was still spent in a lot of creativity and a lot of networking, getting the resources that were needed or connections. So that piece of it, if you want to be an entrepreneur, that's one of the choices you make. Do you want to wear all the hats? Or do you want to just wear the hats that you really enjoy, and then you hire out the rest of them, but you still need to be able to audit what they're doing?
Right. Yeah. I mean, I just watched Johnny Depp talk about his Rolling Stone interview was all about how he had so many millions, but he had the book. So, you know, millions can get stolen easily if you're not paying attention at any level.
I think that's why people that get $1 million or millions of dollars in the lottery lose it so quickly.
Yeah.
They don't have a handle on it at all.
Right. Well, thanks. I wrote down that title. I'll check it out.
Oh yeah, I like the E-Myth Revisited. That book.
Or mastered. That's
Yeah.
I think one of the
Yeah.
last one. Any of those will have the basis of it.
I have a copy if you want to borrow it.
Sure.
Yeah, it's a goodie.
All right. Thank you, ladies. I'm
Oh,
going to
thank you.
Thank you.
To see you soon.
peace and prosperity to you.
Yes,
Too.
and to you. Great.
Erica, do you have anything?
Erica, are you there? Erica?
We can see you're unmuted, but we can't hear you.
Okay, well, Trina, it is after 9.
Yeah.
So, well, thanks everybody for showing up. And thank you, Trina. It was wonderful.
Thank you. And thanks, Erica, for being here. And if you have a question, you can email either one of us too. That would be fine. Or you can type in the chat bar, till we turn it off. But our emails were up there. the
And
phone
also,
number.
you can find us on Facebook pretty easily.
Sure.
Yeah, Trina's under Trina Giordino Cooper.
Trina Giordano Cooper.
Giordano.
Yeah.
And I'm under Kathy Magrish Mason, which is my maiden name. So
Well, thank you for being
Thank
with us.
you.
Appreciate it. Bye-bye.
wonderful, wonderful presentation, Trina. Thank you.
Bye-bye.